everyone, Donna here from Mortgage Powered Financial Group, and welcome back to the Mortgage Sweet Spot Lender Edition. This series is where we sit down with our lending partners to break down real policy, real files, and conversations brokers don't always get to hear. Every lender has their strengths, their quirks, and their behind-the-scenes magic. Better deals, better relationships, and better results. Let's jump in. And I'm so excited that you're here.
I'm more excited to be here.
Oh my goodness, how's your week?
My week is great.
Busy, right?
Very busy.
I feel like you're back to back to back all the time.
I'm back to back all the time, but always have time for you.
Oh, well, that's flattery will get you everywhere, I promise. For anybody who doesn't know who you are you?
I'm Deanna Lip, and I'm the District Vice President with HomeEquity Bank, provider of the chip reverse mortgage.
I actually saw that on your signature line the other day. Did that change?
I'm a business development manager.
No, you're not.
I am. I'm in the business of supporting my broker partners in all things chip.
You are exceptional at what you do. So
Thank you.
What is HomeEquity Bank?
HomeEquity Bank is the national provider of reverse mortgages. We've been in this space for almost 40 years. And as you know, there's others that have come into the space, but we are the OG.
So for those who don't know, what is a reverse mortgage?
So a reverse mortgage is, first of all, let me take a step back. It is, we offer a product that is purposely built for Canadians that are 55 and better. So it's a specific targeted market. And a reverse mortgage is basically how it sounds. It's a mortgage on your home where you choose whether you'd like to make monthly mortgage payments or not. It is a payment optional mortgage.
So it has accrued interest?
It does.
And the homeowners can stay there for as long as they want?
They can stay there as long as they wish. They also have the option of making interest payments in part or in whole.
So if their interest is $1,000, just so I can wrap my head around this, if the interest would be $1,000 a month, they could pay the whole $1,000 or even $500?
Absolutely.
So they have the flexibility.
They have an abundance of flexibility.
It's almost like they get to design, it's like a choose your own adventure.
It really is. And to the point where they can choose to make $1,000 a month payment for the first 12 months. And then if they want to put it on pause for the next 12 months, they can. And then they can start up right where they left off.
That's really cool. Yeah. So just so that everybody is on the same page, HomeEquity Bank is owned by Ontario Teacher Pension Plan.
Yes, we are.
And this is all you do?
This is all we do.
Okay.
We are the experts in all things reverse mortgages.
What if I have a client that's 54?
If they're going to turn 55 within 90 days, we absolutely can entertain the application. It just can't close until they're 55, but all borrowers do have to be 55 or better. Okay,
so just so I understand, I have a client, I bring them to you, we qualify them today, they sign a 3-year or 5-year term. At the end of the term, do they have to requalify?
No, it's just a simple rate reset. We will notify them. We have an amazing client relations team. They will receive notification what their current rate is and the date that it's being reset. If they choose that they want to take a shorter term at that time, they also have the ability to call into our client relations team and they can discuss their options.
What happens if midterm the client decides to sell their house?
If the client decides to sell their house, absolutely we can be paid off. It really depends on where they are in the life cycle of the mortgage, if penalties would apply or not.
So let's assume I have a client who has entered into a 5-year agreement and life happens. They've decided that they need to sell their house. What does that look like for them?
So penalties would apply. So after their 3rd year anniversary date, there would be a 3 months interest penalty.
Huh, I didn't know that.
Like a traditional bank.
That's great. Now, I know that we don't want to talk about life happening, but life does happen. Let's just assume Sally and Ted are living in this house and Sally passes away. Does Ted have to sell the house?
Absolutely not.
What happens?
Nothing happens. We do not have to be paid out until the last of the borrower no longer lives in the home as their principal residence. If Ted decides that he needs to, let's say, go into an assisted living facility, long-term care, he can pay us out and he's still able to reap the rewards of any of the existing equity.
Not that I want to be the Grim Reaper, but what happens if Ted passes?
So if Ted passes away, and let's say it's within the 5 years in the penalty phase of the mortgage, we would never charge upon death. We've had situations where I can speak from my experience where we had a mortgage fund and unfortunately the woman passed away 3 weeks later. So although a penalty would apply, we would never charge the estate upon death.
The estate has the ability to hire their own realtor to sell the house in that case?
Absolutely. We do not get involved in any of listing of the home. We're not entitled to the home. That's one of the biggest misconceptions.
So wait, you don't own the home?
We do not own the home. Your clients and the borrowers maintain 100% ownership of the home. We go on as a mortgage holder, no different than if the mortgage were with Scotiabank or Royal Bank. So the only thing that we ask is that we're paid out within 6 months after death. In that situation.
So there's no rush for the estates to...
No,
okay.
No. And in the situation where we were speaking about Ted, if he had to move into a care facility, we give them up to a year. Because we understand
I guess that transition is hard.
Absolutely, yeah.
Okay, so one of the common misconceptions I have when I speak to people who are looking at reverse mortgages is that their house isn't free and clear, so they don't qualify. Is that true?
False. So absolutely, we know that older Canadians, those that are 55 and better, are still carrying debt into retirement. They have mortgages, lines of credit, combination of both. So what we would do is we would appraise the home, whatever the quote comes back based on age, and whatever they qualify for, as long as there's enough funds to pay out the existing registered debt, we will absolutely pay that out, and they have the ability not to have to make any mortgage payments. So the property does not have to be free and clear.
So the older you are, the more equity you qualify to borrow.
Absolutely. Yeah.
Let's go back to that situation where they do owe. I understand that you will allow second mortgages behind.
We will, up to 65% if it makes good financial sense. So again, a mortgage professional like yourself who's looking at suitability for all of your clients, does it make financial sense? And it's still worth the client's while to take the reverse mortgage and then perhaps a small second, as long as there's an exit strategy and they're able to, exit it as soon as possible. You don't want two mortgages on sort of the never plan. Well, and absolutely we'll look at that.
We just did one of these with you and we placed a second behind, and my exit strategy was the client is going to age up enough over the 2 years that we got the term that they would qualify, as long as the value of the home didn't decrease.
Yeah, it's that is an option. We will look at refinancing. I will let you know that, rates have been higher, values aren't where they necessarily should be. If they're not making any interest payments, if they choose to go down that road where they're not making payments, which is great, the interest is accruing. So there may not be the availability to refinance at that time, but absolutely we could look at it.
Another misconception that I hear, or another reason people don't do it, is because people assume that they have to take all of the money at once. Is
Correct.
That the case?
No, it's not the case.
How does that work?
So let's use simple math. You qualify for $300,000. You have a mortgage combination. You have a mortgage on the property and a secured line of credit that equal $150,000. We will pay out the $150,000 because we do have to be in first position. $150,000 that really there is no need for, will be set aside for something we call subsequent advances. So they could potentially access up to the additional $150,000 over time, and they only pay interest on what they use.
Is there minimum amounts?
There is. $5,000 is the minimum.
So this could work really well for our friends who don't have a mortgage. There's a lot of houses in the area, $1 million plus is not uncommon anymore. They don't have a mortgage and they don't have a pension. So maybe they can have monthly draws?
Absolutely. So our Income Advantage product has become more and more popular. And it's precisely that, Donna. It's looking at cash flow. We're living longer, we're living healthier, we want to maintain our lifestyle, and that comes at a cost. In widow situations, or someone becomes a widower, and unfortunately, that pension has died basically with the spouse. So
isn't that heartbreaking? You work your entire life for a pension, and then you pass away, and your widow doesn't receive it anymore, or only gets half.
Absolutely. Absolutely. And today's day and age where it's very expensive, the cost of living, it's really devastating for some of these clients.
I went to Farm Boy the other day and bought a loaf of bread for $10.
Okay, I only buy the $4.99 sourdough, so I don't know about your bread, but you have expensive taste.
It is Burlington.
Yeah,
so maybe.
Okay, maybe it's a Burlington thing, yeah.
Okay, and a lot of people assume that a reverse mortgage or chip mortgage in Canada is just like it was in the US, where if you happen to pass away and you owe more to chip than the house is worth, your estate has to pay the difference?
Another myth. So I love the question. So absolutely. We have a no negative equity guarantee, whereby we would never go after the estate as long as the property is sold at fair market value. And basically you owe us more than the property's worth at that time. We would never go after the estate for the difference.
So how would that work, just so that I understand? We go, both the parties pass away, the estate sells the house. There's a shortfall on closing of $25,000. I assume that HomeEquity Bank is involved in the transaction and they advance the funds to the lawyer to close?
So we would look at it from a payout perspective. So if they owe $100,000.
Oh, you would just reduce what they owe by the $25,000.
Yes, yeah.
Okay.
As long as the property is sold at fair market value. Yeah.
Which obviously it should be, because okay.
Absolutely.
What are some of the best uses you've seen lately?
So, one of the things that we're really seeing is you have those clients who are looking at this on a pre-retirement solution. So I want to retire, but I can't retire. I have an existing mortgage. Maybe I'm 67, 68 years old. I just want to be done with the mortgage. I'm going to pay that out and live my best life in retirement.
I really like this product for grandparents who want to help grandchildren get through school.
So that's the next phase. You're absolutely right. So then we have those clients who we call it almost a living inheritance or bank of mom and dad. I want to see my children or grandchildren enjoy the funds that we would normally leave them when we pass away. We want to have them enjoy it now, A, so we can see it, and B, because they need it. So is it entering the housing market? Is it paying for education? And so forth. So absolutely.
I'm a really great mortgage broker and a really crappy accountant, but I think that if you take the money out while you're alive, there's no death tax.
It will reduce the taxes, yes.
Right, because so when they pass away, the mortgage gets paid out, and then you only pay tax on it.
It is a great strategy for that also. It's, financial planners are understanding that, hey, this is a great tax strategy also.
Let's talk about financial planners, because you've got the financial planners that love the product and those that don't. My opinion, and it's just my opinion, those that don't love the product don't understand the product. But the reality is, our older population is having to dip into investments to buy the loaf of bread. So how do we get our financial planners to understand that this product is great for the clients, but also helps their portfolio?
Absolutely. They get to retain their portfolio. Right? They're not going to have the runoff.
Because every time you take money out of that portfolio,
someone has to right? And someone has to replace it. And it's very difficult to replace right now. So absolutely. It is all about education, and it's about dispelling the myths. So it's not necessarily what they think it might be. It's really showing them what it's not.
I had the privilege of going to your head office in December, I think it was, where you guys were talking about your client panel that you did, which I think there was not a dry room in the house when they played that video. But one of the things that was coined was the lifestyle mortgage, and changing the conversation that we as brokers have with our clients so that they understand that it's not bad, or maybe it's not what they thought it was. What is your favorite success story?
Oh my gosh, I don't want to get emotional. One of the stories that really resonates with me is a wonderful couple, beautiful home in Ancaster. They were both retired. She was a retired nurse. and she was diagnosed with stage 4 cancer. As much as she was worried for herself, she was more worried about her family. And she didn't want to leave them basically in a financial mess. You know, life happened. They had a mortgage and a secured line of credit that they had fully utilized. And what was really weighing on her was not so much the cancer, but I can't leave my husband with this. And it was really the opportunity just to help them have peace of mind financially so that they could deal with, feel comfortable and dealing with actually really what really mattered, which was her health. And I had the privilege of meeting both of them face to face. She lived for a while.
Okay.
But to me, it was the sense of relief that she had, knowing that her family wouldn't have to deal with the financial strain when she was gone. It was very impactful.
That is life altering.
Life altering, absolutely.
Like she died peacefully.
She died peacefully, knowing that her husband could stay in the home.
I have chills.
Didn't have to worry. Wouldn't be forced to move because financially he just really couldn't do it on his CPP and OAS and his small pension. But yeah, it was just amazing. I mean, that one was sort of a sad story, but there's so many others. There's, you know, a doctor and his wife that we did a reverse mortgage because he wanted to foot the bill for his only granddaughter to go to university and become a doctor just like grandpa. And it was important for him to see her do that while he's still alive. But again, life-changing for the granddaughter.
For both of them.
For both, yeah. So it was a win-win.
You work so hard. You know, the mentality is shifting, and I think a lot since COVID. We're here for a good time, not a long time. And, you know, in the 60s and 50s, when all of these people purchased homes, they were paying, you know, $40,000, $50,000, $80,000, maybe $100,000. Now we're paying $1 million plus for these houses. Yeah. So it made sense to say that, you know, I'm going to pay my mortgage off, and that's not reality anymore.
It's not reality anymore. And, you know, not that we want to talk about divorce, but we're seeing more and more gray divorce.
You introduced me to that concept. What is it?
Gray divorce is a divorce, but somebody perhaps in their late 70s, 80s. I just supported a client who was 93 years old getting divorced. And one was able to stay in the home. I know.
I guess it's better to die happy.
But you know what? You still live your best life. And the other spouse, you know, was basically able to take 50% and enjoy the rest of their life. So,
and because they were both over 55, they could both potentially buy another property.
Absolutely.
Because that's also a common misconception. You can buy a house using a reverse mortgage, right?
100%. Reverse mortgages for purchase. Done more of those.
My favorite use of a reverse mortgage is what I call right sizing. Mm-hmm. A lot of these people are living in 2-story homes, and as we get older, let's just be honest, our hips don't work the way that they used to, and stairs aren't great. But the bungalow next door is $200,000 more than my house is, and I don't qualify for a $200,000 mortgage.
Absolutely.
So we do the reverse mortgage to buy that. This is a great opportunity for our realtor friends as well.
100%. And again, given the ebbs and flows in the market right now, market conditions, I mean, what a great way to introduce this opportunity to your realtor partners. It's chip reverse mortgage for refinancing. You know, if you're a realtor and you have a client that, you know, maybe their home needs a little bit of updating or refreshing to get maximum dollars. People are looking for turnkey in these days. So
isn't there a product that you offer that's fully open short term?
Absolutely.
What is that?
Chip open mortgage. Great for the right opportunity for the right client.
That would be good for the renovations.
100%. Yep. Again, thinking about a reverse mortgage, it's always known as more of a longer term strategy, 3 years plus. But now there's a need for shorter term, and it's way cheaper than a private.
You know, going back to, 2020 and 2021, where the market was on fire and homes skyrocketed in value, I think we're settling a little. I think my opinion is we're not going to fall much more than we have with property values. So we're back to the 3, maybe 4% appreciation in some markets. Reverse mortgage rates are slightly higher than a traditional alternative lender rate, a
Correct.
little bit higher than a bank rate. But where people fall short is realizing that, yeah, your rate is higher, you don't have a payment, but it's offset by the appreciation.
Absolutely.
Because if you don't take the reverse mortgage, the other option is an expensive private because you don't qualify, or sell your house. And getting out of the market could cost you the 3%. Let's be devil's advocate, even if it's only 2%.
Absolutely.
Take 2% off your current rates, and then it's basically free.
I love that. It's basically free. And you're right. Recognizing appreciation, maybe not so much right now, but going into 2027, I think we're going to see a shift in that. But also understanding the loan to value that we lend. We're not lending 80%.
No.
Right?
Because you want to protect them, because
absolutely,
you still want them to have an asset when they pass on.
Correct. And it's important for some clients, some of your clients, I'm sure, to leave behind a legacy. They want to leave something to their heirs and not debt, hence the no negative equity guarantee, which is amazing. But also, some of that equity will still be left because our loan to values are purposely built. The older you are, the more we lend.
I'm not going to lie, as an agent, as a broker, it frustrates me because there are other options in this space with other lenders that do go higher in the loan to value. And, we talked a little bit about it earlier. Exit strategy is the most important thing. And my concern with some of the other lenders in the space is they lend too much now that there's nowhere for them to go.
Absolutely.
And what happens if those lenders exit the industry because they haven't been here for as long as you are, and they do other things, and they rely on private money for funds, and funds run out? What happens then? Now you're putting your client in a position where maybe they're forced to sell.
Absolutely. And I think that comes, that's why yourself as a mortgage professional, understanding your client need, where they're going, and I think from a suitability perspective is so important.
I mean, sometimes there's going to be a space for the higher loan to value
for the
today,
right client,
with the
yes.
client's understanding that, you know what, we're here for 5 years. It's going to give us the opportunity to clean up some stuff, go through the 60 years worth of belongings we have in this house, list it and sell it on our terms when we're ready.
Yeah.
Okay, no problem. A little more today makes sense. But you guys are thinking of the whole picture, which brings me to my next point. Oftentimes, the biggest stumbling block is children.
Mm-hmm.
And I think that they're putting themselves before the needs of their parents because they are thinking about what they're losing, not what their parents are gaining. How do we change that narrative?
So, it's a great point. And I've been fortunate enough working with mortgage brokers where that hasn't necessarily been the case most of the time.
Okay.
Once they understand the product and what it is versus what it's not, again, speaking about loan to value, taking what they need to be comfortable to remain in their home. Is it a hard conversation maybe to have to say, hey, listen, maybe you're not going to get 700,000 at the end of it. Maybe you're going to get 4 or 5, and honestly, again, the education piece is so important. If you show them what it will look like over time, it dispels some of those misconceptions.
For brokers watching this, you have an amazing online portal with awesome tools. You don't even need a password to get into anymore, which is really cool. But we can run scenarios that we can print, and it compares options, and it talks about appreciation and the value of the home at this time. Print that.
Print it. It's customizable. And again, it really is an amazing tool. Our marketing team, I have to give kudos to. They do a fantastic job.
They're exceptional. The resources, like you could go and just take posts and post them and
plug and play,
yes.
Customize, sell it as your own. We do all the heavy lifting for you.
I love that.
That's what we're here for. We want to take care of our broker partners.
Do you need to be signed up with Chip Reverse Mortgage to submit deals?
No, you do not.
I did an expert program with you where I'm considered an expert. How do agents do that?
So we do have a sort of, I call it a chip refresh, where for those agents that are interested, I can spend 2.5 hours. We can go through all things CHIP so that agents feel comfortable and how to approach clients with the option of a CHIP from a suitability perspective, if it makes sense. And it's really is just learning about the product and understanding the scenarios. And I'm always happy to do that. I do give a test at the end. So there is a passing grade. But listen, we want more reverse mortgage specialists in our industry because the opportunity is there. The demographic is demanding it.
One thing that really resonates with me with HomeEquity Bank is how open and receptive you are to feedback from brokers. And like I said before, I've had the privilege of coming to a couple of your invite events where we get to listen to past clients and leadership talk about the vision. But I've been at one year where they ask us for advice, and at the next year where they're announcing that they're launching the things that we recommended. And that's a true partnership.
Absolutely.
We have the boots on the grounds and we're the ones having the conversation. And I have never come across a pain point that you guys haven't been able to fix, which blows my mind because it's not common across the lender space where lenders really do want to partner with their brokers. Where my struggle is, why aren't more people, other than education and not product knowledge, not understanding, why aren't more brokers jumping on this product? I don't want to use the word bandwagon because I legitimately think that this is the way of the future. I don't know anybody that's going to be able to pay their mortgages off anymore. Right? And that makes my heart sad. You know, when you're paying $1 million for a townhouse, at what's the average age of a first-time home buyer now? 36, I think I saw recently. Right? How are you going to pay $1 million off in 30 years to retire? I can't even imagine.
And look at the number of Canadians that are delaying their retirement. Like, we have applications where clients are still well into their 70s and they're still working. Like, that's sad.
What's even sadder is they're working, they retire, and then they die.
Yeah.
Like, that makes my heart so sad. Yeah. Speaking of new products, are you guys working on anything fun that you want to share?
We are. Can't share it, but you'll be the first to know.
Then I can share it? Okay, fine.
You'll be the first to know, Donna. Yes, we absolutely are working on some new products.
We talked off camera. 2026 is hard for everybody in this space right now. If you had one piece of advice for brokers going forward, what would it be?
Gosh, stick with it. You know, we've seen the ebbs and flows. We've been here before.
2008.
Yes. You know, it's really important, I think, to keep in touch with your clients, managing your database. You know, specifically when we speak about CHIP, I have so many conversations with brokers who are like, how do I find them? Well, you know, let's start with your database. Who's coming up for renewal? The first thing you need to look at is their age.
Most of the CRMs and the submission platforms allow you to run reports
Absolutely.
Based on age. And then if you go onto your portal, you'll understand based on age, percentage, loan to value, that you'll be able
Correct.
to go. So you can pre-screen a lot of these people. So you're not calling all of them to offer a product. You have to do the legwork first to make sure that the conversation is relevant. Yes?
Absolutely. Or call me and I'll help you with it.
You're really good at that. But I like to call all the time because I'm very needy.
I'm happy to help with the heavy lifting. I understand how you know, busy everyone is, you know, even though the market is saying it's not, but we're busy with different things.
We're busy writing double and triple the deals to fund a third because it's harder. Qualification is harder. Situations are harder, but not everybody has the privilege of having Deanna Lip in their back pocket, and I'm very, very fortunate. If you don't have a dedicated business development manager, you have amazing customer service, where would a broker go to get support?
So we have an amazing inside sales team also. They're called Business Development Associates. I'm fortunate enough to be to work in partnership with, we call them BDAs, so BDMs, BDAs, with the BDA. So you can call. You can go on our website. If you don't have a BDM, you can say there's an option to find your BDM, find your BDA, and It'll show you who you can contact.
How do I get Kurt Browning to record a video for me?
That's a really good question, Donna. Let me get back to you on that one.
I might have to bring that up at the next meeting. All right, so we've spent some time learning about CHIP. Is there anything that we haven't talked about that you think that everybody should know?
So for mortgage brokers, I'm going to tell you what one of our partners has stated. It was pretty powerful. They stated that reverse mortgages, it really is 1/3 of their business. It's 2/3 of their income.
It's true. It's true.
Not that it's about income, but it's about identifying the opportunity and really reaching out to the clients that, from again, suitability perspective, that really, really would benefit from this product.
And I think it's worth noting for the potential customers that might watch this video, clients don't pay brokers to get mortgages with you, correct?
Absolutely not.
No, we're paid by HomeEquity Bank.
You got it, for
and
referral.
It doesn't cost them more money for
it. Does not cost
right?
them anything.
So whether they choose to go through the customer service number themselves or come to somebody like myself, they pay the same.
Absolutely.
But the benefit is they have me who'll come to their house.
Have you. Absolutely.
I love it. I absolutely am in awe over the changes that I've seen over the last 3 to 4 years. I cannot wait to see what is coming, because the one thing that I've learned about you guys is that you understand the demographic, you understand the market, you understand the challenges, and you always step up to find a way. And that makes me really happy. But I want to know a little bit more about you.
Oh my gosh. Okay.
Okay, this is what I call the lightning round.
Okay. Do I have to answer honestly? And if, or do I get to take a drink if I don't want to answer?
I mean, we do have tequila.
Okay, no.
No? Okay,
I'll
fine.
answer.
What's your favorite coffee order?
My favorite coffee order is just coffee with cream.
Starbucks or Tim Hortons?
Tim Hortons. I'm a Tim Hortons girl.
What's the fastest approval you've ever seen?
Oh gosh, we funded a deal in 5 days.
Funniest reason a deal couldn't proceed or had to be reworked?
Could it be someone else's file?
Of course.
I received the appraisal and there was a horse living in the house.
I love
no
this.
joke.
Stress. If your lender team had a theme song, so if CHIP Reverse Mortgage or HomeEquity Bank had a theme song, what would it be?
Oh my gosh.
Bonus points
Donna.
if you sing it.
If I sing it, you ain't seen nothing yet.
Okay, that's fair. One policy you change instantly if you could.
With HomeEquity Bank?
Yes.
Oh my gosh. Higher loan to value. Not really a policy. You're not going to give me that one?
Have you gone away from wet signatures? Because that would be a policy that I would change.
Okay, let's go there. We allow wet signatures now.
No!
We do.
Oh my goodness, welcome to 2026. I'm so excited.
We do. Now, they're
friends, wait, you have to understand, friends. They would not allow clients to sign digitally with lawyers post-COVID. I am so glad that you got into this turn of the century.
Thank you.
Oh my goodness, thank you.
You're welcome.
Best takeaway of the day.
Oh, gosh, okay.
Oh, so if you weren't, I know that you have not a long, because I don't want to age you, but you've been in the financial industry for quite some time. If you weren't doing this, other than retiring, what would you be doing?
I love volunteerism. I do some work with Kemp Care Hospice.
Cool.
And that's what I would be doing.
I love that for you.
And I'm an avid blood donor. Please give every 85 days.
They can't take blood. They can only take blood from my hands. So
listen, you can give it other ways to your community, and I know you do.
I try really hard. I try, but I'm afraid.
Yeah. You've got your wings.
What's one myth about HomeEquity Bank that you wish could die today?
We're going to take over a home. We take your house.
I knew you'd say that.
Honestly, it's so far from the truth.
On a scale from 1 to absolutely not, how do you feel when someone calls you before checking out your partner portal?
Call me anytime. Like, do I have to give a number?
No,
okay.
That's fine.
No, it's okay. I will. You can always call me.
I think I know the answer to this one as well, but if you could ban one type of deal from ever hitting your inbox again, what would it be?
Oh gosh.
Can I answer it?
Sure.
80% loan to value, 54 age and income.
Old? Yeah. But honestly, I mean, I deal with great brokers. I don't get those deals. They don't land in my inbox.
Oh, I love that for you.
You know what? Because I really encourage, reach out to me anytime. Let's discuss it before you submit it.
You're very good at returning calls and emails and text messages, even when I call you on the weekend. So thank you for that.
Anytime.
Which is worse, a deal with no story, a deal with no documents, or documents submitted 2 days before closing?
Documents submitted 2 days before closing.
Right? You guys need to be broker complete before it funds, right?
Yes.
So the only thing that would be hurting the deal would be the agent who is too lazy to submit their documents.
Absolutely. Yeah.
What's one thing that brokers think impresses you but doesn't?
Telling me all the great things about the deal, but not telling me what's wrong with the deal. Does that make sense?
Hiding the hair.
Yeah, and everything has hair on it, it seems these days.
Right?
And I'm okay with that.
See, I'm different. I start with the hair.
I know, but I think it comes from a good place because there are positives and there may be a couple of negatives about the deal, but I'd rather work through the negatives and get to an approval versus what's great about the deal. Like, let's just get the full story.
You know, I say all the time, I was on a panel on Friday, and one of the things that I said was, gone are the days of exceptions. You know, 5 years ago, if we need an exception, sure. Now, not even for a second. So it's so beneficial to start with the hair, because if we can get through the hair, everything else is great.
Absolutely.
Right?
Like we'll do our best to make it work, and 99.9% of the time we do.
Where can brokers reach you?
905-745-4173 is my number. Email dlip1p at heb for homeequitybank.ca.
And what is the website?
Chipadvisor.ca.
Amazing. Any final sweet spot wisdom you have for brokers listening today?
Oh my gosh, there's so much opportunity. I'm here to support you. We're here to support you, not just me. We have amazing BDMs and BDAs. And honestly, like, we really are here to help you in your business, to help you grow your business, to help you with your centers of influence. Whatever we can do to help you, honestly, please take us up on it.
Amazing.